Good morning and welcome to the Options Trading for Income weekly update with Locke Your Success. Before we get going, we would like to remind you that the presentation is for educational purposes only. We're not broker-dealers or financial advisors, and we're not making any specific trade recommendations. Also, please be aware that we do use hypothetical computer simulated trade in the presentation. However, the results are believed to be as accurately represented as possible. Also keep in mind that the risk in trading options can be substantial, so please be aware of all your risks prior to placing any trades. Make sure you come on over, become part of our inner circle, and join our mailing list. You get your free report, The 7 Secrets to Becoming a Successful Trader, and sign up for this free weekly webinar. If you're watching this on YouTube or some other venue, come on over to our website at lockeinyoursuccess.com. Check out our programs. We have super simple spread trades. We have the M3, the bearish butterfly, the Rock, the M21, and soon to be released APM squared. And stay tuned for our programs that are currently under development. If you'd like to get on the list to be the first to know about the APM squared when it's released, follow this link here and sign up, and you'll be on that list. Also coming this fall, Trading Triangle book. We also have a Trading Triangle online program that we're developing, and we got some directional stuff starting in June. Another thing that's going on that's pretty exciting is my wife Sherry has finally decided to join us here, and she's been doing a lot of great stuff in the background, and you're going to see we're going to start making a lot of progress going forward. And she has something fun and exciting to tell you about here, and that is our challenge that we're beginning. So Sherry, are you there?
I am. Thank you, and I'm very, very excited to be working with John again in a more full-time capacity, and I'm very, very excited and loving every day working with individuals who are looking to improve their lives through their financial success. So we came up with this Lock Up Hawaii 2016 challenge. And so what we are planning is in July of 2016 having a seminar out in Hawaii, and we're hoping that anyone who would like to join us can do that. And to be able to do that, we decided to create this challenge. So what we're asking anyone who wants to, this is open to anybody, to establish a goal to reach. For us, it was a travel budget to get to Hawaii. And we are, for 4 people, we estimated about $10,000, and then we need to calculate the earnings percentage required on your capital to reach that goal. And we're asking people to report the 3rd Friday of each month, and of course I'll send out reminders and so forth to get that. And the challenge will be for 8 months, so it's going to run from July, so it's going to be the 3rd Friday in July, which would be, the first reporting would be, I believe it's the 16th of July through February. And we believe that if you have a common goal with others, you'd be more apt to reach it and kind of stretch your personal box, if you will. And all the progress that you'll see will be posted to our website. I'm going to have a challenges spot on our menu bar, and we hope that you'll join us. Just joining the challenge does not obligate you to come to Hawaii with us. We're just hoping that you'd consider it and maybe stretch your thinking in what you can earn. So
that's fantastic. Yeah, and how do they, if they'd like to join that, how do they do that? Wanted them to email us, or?
Yep, they can email us. I did send out an email to all the subscribers. If you didn't see it, it may be in your spam, so you can check there. If not, you can just shoot me an email at sherry@lockeinyoursuccess.com, and I will get it, and I will confirm your entry, and you'll also see it up on the website under the challenges menu bar.
Okay, super. Well, thank you. Yeah, and thank you for doing that. Sherry, like I said, Sherry put this together. We just have a question: will there be any seminars during the trip? Yeah, my objective here is to do a presentation, and probably like 3 half days or something like that. And we're still putting the details together. Sherry and I have never been to Hawaii, but I'd like to have a seminar out there, and I'd like it to arrange it in a way where we have a lot of time to do stuff. and hopefully it's tax deductible for most people. I mean, check your tax laws and if you're of trader status or whatever. And we can go out there, we can do some education, we'll have I'll do some presenting, we'll have some students present, we'll maybe go on a group excursion, and then you can go off on your own with your families or whatever for the rest of the time. So we want to make it a really fun trip and educational and hopefully tax deductible, and that's our goal, right, hon? I think she may have signed
Yes, it is. It's I'm extremely excited.
Yeah. So I think it's going to be exciting for all of us, and I think it's going to be a good time. So that's our goal, is to have a good time. And like I said, I don't have the
so
cost.
Everybody get your.
What's that?
Sorry, I was just going to say, just if you want to join, get your emails in, and we'll make sure you get on the list.
Right. And of course, I mean, I'm sure we're probably going to get sold out like we did for this 8 p.m. thing. So the people who are in the competition here, or not a competition, it's really a competition of yourself, and it's kind of, even the challenge here is for fun. But people who are in the challenge get first dibs on going with us on the trip and getting to the seminars, and from there we're going to get the details together. Like I said, we haven't been to Hawaii. I can't even price the seminar right now. But we're guessing our traveling costs and hotel are going to be around $10,000 for the 4 of us, and that may be way off even so. But we're just doing the best we can to make a guess for that. And as soon as we get our costs together and what it's going to cost to rent rooms and stuff like that to do what we need to do, we will get more details out to you later. But like I said, we're just in the planning stages of this, but I think it's going to be a lot of fun.
Yes, it is. I can't wait.
Yeah, Thomas, I don't know. I'm glad you like the idea, Daryl. That's great. And Thomas, I don't know of the capacity yet. I mean, I'm completely wild guesses around 30, but until we start making calls and figure out exactly where we're going and what things cost and what types of room sizes they have and stuff, I'm not sure yet. Okay, so that's what we have going on. Thank you for bringing that to us on and getting this stuff together. So this is going to be a lot of fun. So if you want our contact information, here it is. And let's get going on the trade update. So let's see. As expected, as far as the Russell goes, we were kind of expecting the Russell to chunk back and forth and continue higher. Again, that's what it's been doing. Not surprising, the futures are down a little bit today. Would expect the Russell maybe to come down 1250 or so, in other words, test this trend line again and bounce higher. Meanwhile, our other indices continue. Let's go into charts here. Like the SPX, continue the sideways range as expected. Like I was saying, I was thinking that the SPX was going to be pulling into the sideways range. It's holding it quite nice. My thought here is that if the SPX comes down and holds this support level down here, that's likely going to make the Russell turn around and bounce higher. So my thoughts are SPX comes down into 1270, 1260. The Russell comes down possibly to the 1240 area, or it may continue to do what it's doing and maintain its relative strength. Then the SPX is likely to bounce up towards the top of its range again. As it does that, that will likely pull the Russell to new highs. And we'll probably get a breakout in the Russell. And that is my shorter / midterm thoughts, is that we come down a little bit, and who knows how far we come down today. Like I said, the market's been very bullish at buying back any kind of retracements. But we come down at least some this week, bounce higher, and likely break out higher. I don't know the timing on that, but that's my thought going forward with this. And it kind of matches what's going on in the Dow as well. The Dow, if it comes down with the SPX, it's going to test somewhere around the 17.7, 17.6 area, and then likely bounce back up and maintain its sideways range. And that's going to contribute to the Russell breaking higher. And the NASDAQ is still pretty strong, and that may break out with the Russell, although I think it's going to be a little bit behind now since it's been kind of lagging a little bit. So those are my thoughts on where the market's going for the short and midterm. We'll have to see if that comes to pass. What's our failure scenario? Our failure scenario is if the SPX and the Dow start breaking support, then that's going to change the opinion. That will bring the Russell probably down at 1210. So what I'm doing is I'm watching on the Dow, for example, this level here at 17.6. If that breaks down from there, we're probably going to get a pretty good run on the Russell down to 1210. Fairly fast, fairly rapid. And that's my scenarios going forward in both directions of my thoughts. So let's take a look at what's going on with our positions here. We have an M3 trade, which has been essentially even all month. There really hasn't been a whole lot going on with this. Let me go back to Monday. We'll show you the position there. This is, why is this not showing me this? There it is. Okay. Here's our position as of last Monday. We were in essentially a broken wing condor. We had 1160, 1210, 1240, 1260 strikes on, and we had our long at 1140. Right here, we were sitting at minus 44 delta, edge of the tent. Everything's looking completely fine. Wednesday, let's see, our delta was too high outside the tent. So let's just go to Wednesday, and I'm just going to go to before adjustment time. Right, so now we're up near the 1270 area. Our vega is positive. Our delta is a little bit more negative than we'd like. So I just did a simple adjustment here, and I sold 5 1240, 1250 verticals. So I moved 5 1240s to 1250 over here. If we take a look at what that looks like at 330, this is what it looks like here. It brought our delta pretty much neutral. Our delta about minus 25 and our vega pretty much neutral. On Thursday, okay, hold on. Jim Nielsen says, being muted by the organizer. I am not, well, you're muted as far as not being able to talk. You should have audio. You should be hearing audio. Is everybody else hearing audio okay? Okay, yeah, okay, so everybody else is fine. So Jim, that's something on your side as far as not being able to hear, which you probably can't hear me. But everybody else is having audio is okay everywhere else, so it's something on your end if you hear this on the recording. I apologize for that. Okay, so here we are with the trade. Thursday, of course, the market was relatively flat, but being this close to expiration, with time passing by, our vega went significantly positive on Thursday. And again, for me to roll up, typically I don't like to roll up my position until the market closes up over 1270, which hadn't happened at this point. Again, we've went positive vega here. So I just did another what did I actually do here? I did 5 1240, 1250s, and I also rolled up our lower wing 20 points, mainly because I'm only having time value of maybe 93 cents at this point here. So I wanted to get some of that, time value into my short options. That really helps a lot with my volatility issues I'm having. But I wasn't ready to roll the upper side at this point because I'm not to 1270. So this is a little bit of an unorthodox adjustment, but it is certainly within M3 concepts. So it's just one of those unique situations where I didn't have the any more time value really at these 1210s. I wanted to get more time value in here. I didn't want to roll yet because I wasn't clearly over 1270. So rather than rolling up this 1240 to 1250, which would be the more standard move, I decided to pick up on the lower wing and just raise it higher. Now, if the market continues over 1270, we will also correct that by rolling up the upper wing and making some other adjustments as well. But that's the way that I actually handled that. That puts us in a position that looks like this. So as of right now, we are still relatively flat from a profit and loss standpoint. My best guess here is that the market is going to continue, well, my best guess here, that is if the market takes off to the upside or holds up in here, we're probably going to be closing this at near break even. And if we get lucky here and the market actually does back off and stays down, then we may actually make something decent out of this month. Realistically, in this position, if this gets up 5% on expiration week, it will be closed and exited moving forward. Of course, if it gives us too much trouble to the upside, I may also just close it out at break even and continue on. But this looks like more or less of a break even type of a trade for June, which is essentially what it's designed to do if the market grinds up. So that's what that is, and again, that looks perfectly fine. If we have our June bearish butterfly, that's already been closed, so we'll move past that. Our June rock trade, I'm going to go back to Monday again for that. And here is what we looked like as of last Monday. We were up about $4,500. We were running about 90 delta. We had our 10 1240 butterflies. We had 7 1280 butterflies, which were actually broken wing due to the fact that we didn't have any time value when we bought them, at any strikes any higher than that. So this is what we look like here. Of course, we had, let's see, on Thursday, let me see the T-log here because I didn't mark the date I made the adjustment on this, which was the 10th, which I believe was Thursday, but it may have been Wednesday. So, I'm sorry, it was Wednesday. So on Wednesday, I'll just go back to 1500 prior to adjustment. We had our relatively large up day. We have our maximum delta that we're supposed to allow here of about minus 250. We're minus 349. So I came in here, I added the rest of these butterflies up at 1280, which were, I just kept them at the same strikes. I just keep these at the same strikes, and I added the other 3 in here. And also because I really don't have any time value up at this 1300 level, rather than adding butterflies up at 1300, I simply did 2 1250, 1290 verticals. So if you take a look at this, that's adding the rest of those butterflies in, and here are the 2 verticals. Put us, I like to have around minus 180. This put us at minus 158, which was a little bit more of an adjustment than I would have liked, but I had a choice if between 1 and 2 verticals. I didn't have a whole lot of difference. I had a choice of like minus 200 or minus 158. I went with the minus 158 here. So here is what the position looked like at that point. And then if we come to today, or actually as of Friday, this was minus 54 delta up about 81.97. Now this is the position that we look like here. So from this point, being an expiration week, what I would do to the upside is just continue on the plan and eventually get into butterflies at the looks like the 1300 area as the market continues to grind up, assuming the pricing of the options let me do that. To the downside, I'm willing to drop out of my upper vertical spread that I have, and then if I have to continue and kick this back into a cat position and I am up close to $5,000 at that point, if that's the case, then I will just exit this trade, which I may do intraday on expiration week. So that are my thoughts here. So I have 2 questions here. First is, the rock being a broken wing, do I tweak the delta range a little bit? No, I generally don't. I keep the delta range about the same with one exception. And the exception is if perchance I get to the point where my delta range, I don't hit my delta numbers before I exceed the short strikes here, then to me that's an issue. In other words, if I was tight enough of a broken wing, I might actually get to a situation where my delta never hits the point where I would add up at the 1300 level. So if it gets to the point where I wouldn't add to the 1300 level before I get past my strikes here, then in that case I would tweak my delta range. So in other words, I'm using another metric also to help deal with this when I get into broken wing positions. And that may also change my timing of taking this. I really want this short strike, this 1290 at the 1300, So I may also end up rolling that up to the 1300 and then selling the other side of my butterfly depending on what I have for time value. So it gets a little tricky here into expiration week on actually the best way to manage this, but it can be done. So let's see here. I have somebody who's requesting a T-log, which we can do that. Not a whole lot of moves here in the rock trade. We had, our entry. Of course, I entered this trade incorrectly, if you remember, and we had to correct that when we had to make adjustments. We gradually corrected my entry, and that's what we have so far. So that is that. Let's see. Due to the steep gamma trend to this position, would I be better off to exit now? Not if the market goes. Let's see. I'm sorry, I lost my question. Would I be better off to exit now? I mean, not necessarily. If the market's flat, then, or if it continues to grind, I don't really have an issue here. I still have certainly a decent amount of money to make here if the market's relatively flat. So I'm not itching to get out of it. But yeah, I am at some price movement risk. In other words, if I was attached to my profits and I was saying, geez, I don't want, I don't want to lose, or I'm up $8,000 and I'm going to be freaked out if I lose 3 of that, then yeah, you'd want to exit. In reality, if you're giving yourself the drawdowns that you need to manage the position, if you're saying I'm up to $8,000, I'm still willing to take a loss of $2,000 by the time I exit this trade, then I will certainly end up, there's absolutely no reason to get out of this. Realistically, the profit and loss pop I had on Friday, if I'm trading this live, would probably be enough for me to pop out of this. I actually really like exiting these positions live when we've had a day when we have had a significant increase in our profit and loss, and we're near the center of the position, and we're somewhat near our profit targets. I think that's a good day to exit, and realistically I would have seriously considered exiting this on Friday. But depending on the type of trader you are, there's really no reason to get out of it at this point. So those are my thoughts on that. Do I have a problems with cap position during expiration week with low time premiums? Yes, you will. Right. So I may end up getting into this, and well, first of all, there's 2 things about shifting in the cap position here. One is cap position has a lower profit target anyway. So if I'm in cap position, I am happy with a 10% profit number. If I get to the point where I have to shift, I'll probably be close to that anyhow. Second is, so that's a reason just to exit and not worry about it, because I'm probably not going to make any more money. In other words, I could do the exercise of shifting back my butterflies, going into cap position and letting it expire, but the chances of it actually making me any more money would be very, very slim. So I probably wouldn't bother doing that. I'm just kind of holding on to risk for the possibility that if the market drifts into the center of the tent on expiration day on either side, then I might make some more money. But realistically, I'm better off just kind of closing it out and moving on at this point. So the last view is missing the first part of the T-log. Well, let me see. This is the whole T-log for June rock trade. So it was entered as a rock trade, and like I said, very, very few adjustments here. So this is the whole rock T-log. And we spoke about handling the rock and expiration in the APM course. Oh, yes, we did. Yes, so that's just a comment from Thomas. He just said we spoke about handling the rock, this in expiration during the APM squared, right? So we did talk about this a little bit. Okay, great. Thank you, everybody. All right, so that's everything else is just comments. So all is good. That is that. Let's take a look at our next trade, which is just the V Condor, and that had no adjustments. I don't believe this week. Right, that had no adjustments this week, and we're just kind of in waiting mode, waiting for this thing to expire. We were thinking if the market actually did take off in the upside direction that we may actually make a little bit more, but this ended up being more or less just a break-even trade. Again, I think we talked about this last week when the market went down enough to knock us out of some of our puts to the downside on this trade earlier, and really the reversal that usually comes when that happens and puts us up into this range here never actually happened this month. So this is the situation where it's just kind of a lackluster break-even type of a trade here. Here's the T-log on this one. We had our entry. We had a few puts that we got knocked out of, and then we, I guess 3 of them. And then we had to spread out our straddle. I'm not sure what. We had to buy back 2 puts here. I'm not sure what this is here. I guess I had to buy back a call and a put, right? So actually, I don't know what that is. But anyway, this is the position that we're in, basically break even. I'd have to go back to remember what that other adjustment move was. Okay, and that is our June positions. So let's see if we can take a look at July. Assuming we can stay connected to NetView, I just got a warning notice. Let's take a look at our July bearish butterfly, which we may not be able to do. I may just have to describe to you verbally what happened here if option view doesn't come back. I'm going to try to close and reopen. This has been happening right before market open, I guess fairly regularly lately. So see if we can get on a server here. Let's take a look. Oh, Andrew was saying it looks like a 1240 call was entered as part of a put in the T-log. Oh, looks like good. I'm back on option view. All right, option view is back going. So let's just take a look here. July bearish butterfly. We did not have any adjustments with this. This is sitting up right now about $600. It's about break even. And here's what our position looks like. Let me go into back trader. There we go. Apologize for that delay. And so nothing there. We have our June M3. I'm sorry, our July M3, which did have a couple of adjustments. We'll just shoot back to Monday here. So here's our July M3. No, this is our bearish butterfly as of Monday. Let's go to our M3 as of Monday. If you remember, we had entered with 12 contracts because of the volatility, the T+0 line skews on entry. And here is what we look like here. On Wednesday, when we had that large up move in the market, since I had my 12 butterflies on and I was running into a delta issue, I just pulled out 2 of the butterflies. So if we go to Wednesday, what we ended up with here is just dropping out of 2 of these butterflies. It brought us down to our minus 50 delta range, which was here. Again, I'm still a touch higher than I'd want to be on delta, but I figured I'd wait till Thursday. Thursday, the market remained high, so what we did is 5, 12, 10, 12, 20 verticals here. I'm sorry, 12, 20, 12, 30 verticals. So if we go to Thursday, you can see did these 5 verticals, brought us down to minus 44 delta. Looks like so. And that is all we have for adjustments on this particular trade. I'll go to Friday. I'll show you the T-log. So here we look on Friday. Here's our T-log on this position thus far. And I just have a comment that, yeah, someone didn't get started on the July M3 till 36 days to expiration. Well, that's perfectly fine because not a whole lot's been going on. So here's what we are here, basically at break even at this point as well. And let's see, what else do we have here? The only other position we have is a June V Condor, which if we take a look at this, I'm sorry, July V Condor, which if we take a look at this trade is in this position here, up about $2,000. It's doing fairly well as long as we continue to grind up. It doesn't look like that's going to be the case as of today, right? Because we're going to be backing off a little bit. But this is what we look like as of Friday close, and that that is all the positions that we have on. We will be looking to enter into our rock trade on Wednesday, and we'll see if we're going to go into a rock position, if we're going to go to an M3 position. Right now it looks like we're probably going to be in a regular rock position going forward, but we'll see when the time comes. Also, this is results week, so next week is going to be results week, and we'll let you know how all these trades worked out, including the rock trade. And like I said, we'll show you any new trades that we have on at the end of the week. So I hope everybody has an awesome week trading, and we'll talk to you next week. Thank you.